Hello, Siam here again. So where now for gold and silver? You've probably been thinking what on earth has been going on in the bullion world, and that the price of gold and silver can't decide whether it's going up or down. And there's been a lot of bad press about bullion in the media in general, and some mainstream economists saying it's a worst investment ever, etc. Well, this is where I have to strongly disagree, and these two charts show exactly what's been happening. So over the last 15 years, gold and silver have been rising rather aggressively, and it's in a long and strong upwards secular bull trend here. Gold's gone up over 405% and silver just under 1,000% at its all-time highs. But this is where the media have been focusing on completely the wrong thing. They've been focusing on what's happened in the last 18 to 24 months. And with gold, it's dropped 31% and silver's dropped about 55%. But this isn't a reversal, and that's where people are going wrong. People are saying that this is the start of a long-term reversal. But if you look at the big picture, you can see that this is just a temporary pullback. And it's no different to what happened in 2008, which I'll show you later. But even with the downturn in prices recently, gold still got up over 247% and silver 362%. So to really understand why the market prices of gold and silver have gone down, you need to understand this basic concept in the industry anyway, of naked shorting. And this basically means that you can sell something which you do not own. I know that's a pretty hard and weird concept to get your head around, but let's put it this way. Let's say I lived in the desert and it's really hot and dry, and I could see a drought coming along, an even worse drought than we have at the moment here. So obviously I need lots of water. Now let's say I was quite stingy and bottles of water in this country were, I don't know, £1 a bottle. Now, because I'm a little Mr. McScrooge here, I wanted to get as much water as possible. But I'm not prepared to spend £1 per bottle. So what I could do is I could go to the commodity market in the capital, and I could print off, well, let's say I've printed off, say, 1 billion contracts, i.e. a paper contract saying I owe you 1 bottle of water. I can then go onto the commodities exchange and dump, say, 1 billion of these little paper contracts onto the market. So in a financial sense, in terms of the paper markets, all of a sudden I've just dropped 1 billion bottles of water, basically. I know this is a very broad brush analogy here, but yeah, so I've just dropped 1 billion bottles of water onto the open market. But you have to remember, it's just paper bottles of water. Now, for the traders out there and the computer algorithmic traders and high frequency traders, people are going to start picking up on that and go, oh my lord, everyone's selling water. And so everyone else jumps on the bandwagon. And before you know it, the price of water is dropping quite rapidly. So let's say the price is now 50p a bottle. I then decide, right, I'm going to fill my boots here and buy up all the physical bottles of water for 50p a bottle. Actual physical water. So that leaves us with quite a few things going on here. So one, let's say the price of water is now below mining costs. So lots of water companies like Evian and Volvic, etc. start to go bust because they cannot extract water and sell it for a profit. So they either go bust or stop selling water and just keep hold of it until the market price rises. So that then creates a shortage of physical water. And because I've just bought every bottle you can think of, there's nothing on the market. So what happens? Supply shrinks, demand increases because the drought's just about to arrive, and so the price soars. So here, and this is an exact example of what's happening with the gold and silver market, especially with silver, because companies like or the big banks like JP Morgan and the Federal Reserve and also China are suppressing the prices of gold and silver. So here's a chart of silver, and it goes back to, I took this about mid 2013, And what you can see here are two big smashdowns. So the first one here in 2011 is the biggest smashdown ever in terms of silver prices. And what happened was that the market had 2 billion ounces of fake paper silver dropped into the market. Now, to put this into perspective, the whole world combined only produces 1 billion ounces of real silver per year. So they dumped twice the amount of existing or global production in about a day or so, which is crazy, and that's why the price dropped. But then again, in early 2013, they dumped at least 10 billion ounces of fake paper silver onto the market in order to drop the price. But as you can see, the market's getting a bit resilient to all of this shenanigans, and so the price didn't drop that much. So, what's really been going on? Well, that is half of the story. But basically, supply is vanishing because the price is so low at the moment. Lots of mining companies are going bankrupt or bust, or they're just refusing to sell their bullion onto the market, and they just keeping it until the price increases. And demand is now highest in human history. There's been no time ever that investment grade silver is just flying out of the vaults into the hands of the public and also the central banks, but also China. And you would have got an idea of that by now with the other presentation. So basically, banks, billionaires and countries are racing to hoard it. I won't go too much into gold and silver ETFs, except that they're close to defaulting. Basically, if you take GLD or SLV, the two biggest ones, like SLV for instance, for every ounce of silver they have in their vaults, they've leased that ounce out to at least 100 different people. So there's 100 different people out there thinking that they own the same ounce of silver. So basically what will happen is, if the price starts to rise and people start trying to cash in on their ETFs, or just to liquidate their position, they're going to become a little bit unstuck because they don't actually have enough physical gold or silver to actually deliver on. So what's likely to happen? Well, here in 2008 we had an almost identical example, and the market bottomed, and then from the low over the next 18 months it increased by quite a large margin. And what's happening here is just a repeat. So what could the next one be? And this is a standard ABCD pattern wave, for those of you who trade would understand. But so yeah, unfortunately I don't have a price figure. I no longer think of gold and silver in terms of monetary denominations, pounds of the dollar. I use historical averages. So for instance, 1 ounce gold coin could buy a nice Roman toga or suit of armor in the old days, and a 1 ounce gold coin will buy a nice tailor-made Armani suit. So the values of gold and silver never change, and the reason that the price fluctuates is because the currency supply is increasing in an exponential fashion. So here are the real facts about silver. There's lots of hocus pocus going on around the internet, but here's the facts. Well, this is basically economics 101. In a commodity, when demand exceeds supply, the price surges. So here's just a picture of what happened in the gold rush in Shanghai in 1948. But let's do a little thought experiment. If just 2% of the world, which is just 140 million people, bought just 1 ounce of silver, which is about 22 pounds, demand would then exceed supply. And it only needs to exceed or even match supply just a little bit for the price to go a little bit crazy. Also, people don't really understand how rare gold and silver really are. If you were to take all of the available investment grade gold and silver on the planet and to divvy it out to every woman, man and child, etc., there'd only be about 1/3 of an ounce for every person alive. And with silver, only 1/15 of an ounce. And we are using silver just crazily, mostly for industrial purposes, whereas gold is hoarded and stored. So why is silver so special then? Well, it's because of quite a lot of reasons, really. There's only 7 years of economically mineable silver left on the planet. It's the most thermally conductive element, the most electrically conductive element, the most reflective element, and it's the only thing on the planet which bacteria cannot form a resistance to. So the medical industry and the sportswear industry are using up quite a lot of silver to stop sweating and bacterial infections, etc. Also, not many people know how much it's used. Well, we all know oil is the most used commodity on the planet, but silver is a close second, and then hardened metals like copper and iron, etc., being third. Also, nothing would work without silver, pretty much. Nothing electronic, at least. And there are no substitutes. And they found a replacement for silver already, which is called silicene, but it's at least another 10 years away for making any meaningful difference. And that 7-year stat was from the US National Geological Survey. And the reason they can get that is because silver is formed relatively shallow on the Earth's crust, unlike oil. So we actually know where all of the silver on the planet is. And there's about 15 to 17 years of total silver left on the planet, but there's only 7 years left of the low-hanging fruit, i.e. the economically viable silver. So in order to go after the other uneconomically viable silver, prices need to increase 1,000% minimum. And that's a huge, shocking stat. So let's talk about performances, because a lot of IFAs and financial professionals always say that the stock market will always outperform gold and silver. Well, to be honest, that's just poppycock. So here we have a performance chart of the S&P 500 from the year 2000 to sort of just late 2011 to 2012. And the picture's still the same, even here in 2014. And as you can see, we've had two of the worst stock market crashes in history. And the market has just been ranging. It's just gone sideways for the last 15 years. And in that time, inflation doesn't stop going up. Real living costs never cease. And when you compare that to gold, or even silver, you can see it's far outpaced normal paper assets, like the stock market. Also, we live in a completely different world. In 1980, gold went up by 2,400% and silver by 3,600%. Even in a time when information travelled slowly. So in the old days, you had to listen to Walter Cronkite for the daily updates on the news, or read the news from the newspaper, and then you'd have to act on information 24 to 48 hours later. Whereas now, we live in a completely connected world due to the internet, and we have YouTube and Google, so information travels around at the speed of light. So here's a really important comparison table that I created, and this is the most important slide of the whole video, to be honest. In 1980, only the Western world could have a say in the price of gold and silver. There weren't many millionaires or billionaires, and the currency supply was small. Whereas now, the whole world can play with gold and silver, and there's over 24 million millionaires, and there's over 1,200 billionaires that we know of. It's largely reported that that's maybe double the amount of billionaires, because a lot of billionaires hide their money. And also the currency supply is in exponential growth. Silver was abundant in the 80s, and it still increased by 3,600%, whereas now it's almost depleted. There was only 356 million people that could play with or that could invest in silver in the 80s, whereas now over 7 billion. Obviously, we all know that 2/3 of the world live on less than $2 a day, but still, the stats are the same there. And silver, it was barely used in the 80s, whereas today, our world is 100% reliant on silver, just like it is on oil. And speed is traveling around at the speed of light, or information, that is. So, in summary, supply is shrinking very fast. Demand is just increasing every single day. And so what's happening is, due to the naked shorting, mainly by China at the moment, paper price is going down. That's only so they can get their hands on as much physical gold and silver as possible. But in the long run, I'm saying within any time from now over the next 7 years, silver is going to grow exponentially, almost, in terms of price. So what role should this play in your portfolio? Well, it completely depends on your risk appetite. Now, I have a contrarian view. I think gold and silver is the safest thing you could store your money in, because it is a store of wealth. But again, I know a lot of IFAs. I've met and chatted to over 300 over the last few years, and they all disagree. They say that it's a risky investment, so you should only put a minimum of 1 to 10% of your total portfolio into it. But all I am is an information relayer, so please come up, make your own mind up and make an informed decision using facts. But if you do want to invest in gold or silver, the best place is silver-savings.co.uk or .com, and on there you can actually have a silver saving plan. So you just set up a standing order, and every single month the silver is delivered to your doorstep, hassle free. So remember, bullion is not a commodity or an investment. It is money. Everything else is currency. Avoid paper gold or silver. You need to get the real physical, tangible gold or silver, because if you can't hold it, you don't own it. And it's a medium-term supply and demand play. So obviously no one has a crystal ball and we can't read the future, but history does rhyme rather well, and supply and demand always reigns supreme. And forget the price of silver. It's just like water in the desert. You need it. So hopefully that's helped, and I wish you all the best. Thank you very much. Bye bye.